Imagine you retire at 62 and your paycheck stops. You haven't started required minimum distributions. And for the first time in decades, you have something most people don't realize they have: control. Control over where your income comes from, control over how much taxable income you create, and control over how much tax you end up paying. Now, imagine you do nothing. You enjoy retirement and the years pass. And then one day you hit RMD age 73, or it could be 75. These required minimum distributions begin. And suddenly, much of that flexibility simply disappears and vanishes. The tax planning window you had for years suddenly closes. And for many retirees, it never reopens. And the surprising part is most people don't even know that this window exists. Now, let's talk about why this matters. For most of your working life, your income is largely predetermined. You get a paycheck and taxes are withheld, and the system runs automatically. But then retirement arrives with its new rules. And for a brief period of time, these rules are changing. You may have stopped working. Social Security may not have started yet. RMDs haven't begun. And for most people, taxable income is temporarily much lower than it will ever be again. And for some people, that's a massive opportunity. The blind spot is that most retirees view this period as a waiting room, a quiet period between work and RMDs, if they're familiar with RMDs. But in reality, it may be one of the most important tax planning windows of your entire life. Because once RMDs begin, the government starts helping decide how much taxable income you're going to recognize each and every year the rest of your life. And that changes the game. Now let's pause for a minute. Imagine two retirees, both have the same assets, both retire at 62. One understands that this window for tax planning exists, the other doesn't. The first retiree spends years intentionally managing taxes while they still have flexibility. The second retiree simply waits. And in this example, both reach 73. They have the same destination. They have to start their RMDs, but they may arrive with very different tax situations. And that's why this matters. Small decisions made during this window can compound for years. I've worked with families where proactive tax planning during this window could make a difference of $100,000 or more in lifetime taxes, sometimes double or triple that amount. I've also worked with families where it made very little difference, and we didn't do a lot of proactive tax planning. The point isn't that everyone should do the same thing. The point is that most people never realize that there's this window of opportunity in the golden years. And once this window closes, many of those choices simply vanish. Now, here's the part many people miss. The goal isn't simply paying less tax this year. That's short-sighted. The goal is managing your lifetime tax bill. And that's a very different question, because sometimes paying a little tax today can help avoid paying significantly more taxes later. And that's why this window is so valuable. Not because it eliminates all taxes, because it gives you choice. And choices tend to disappear once this window closes. And that's why I often tell people that retirement planning and tax planning are deeply connected. The question isn't, what tax bracket am I in today? The question is, what tax bracket am I likely to be in over the next 10, 20, or 30 years? Those are very different conversations, and they often lead to very different decisions. When we help families prepare for retirement, one of the things we look at is whether this window exists. How long is it in your specific circumstance? What opportunities does it create for you? And what decisions should be considered while this flexibility is available? Because once RMDs begin, these required minimum distributions, some of these options become much harder to implement. The window doesn't stay open forever. Now let's go back to the retiree we started with. Age 62, retired, no paycheck, no RMDs, and for a brief period of time, they had more control over their tax situation than at almost any other point in their life. The question really is, did they use it? Or did they let this window pass without even realizing it was here? Because that's the real risk. Not that the opportunity doesn't exist, but that it closes before you recognize the value. Now, if you're retired or approaching retirement and you're not sure whether this tax planning window even exists for your situation or how you should take advantage of it, that's exactly the type of conversation we have during a retirement review. We help you identify opportunities and evaluate potential tax strategies and determine whether there are decisions worth considering before the window closes. The link is below. Thanks for watching, and I'll see you in the next video.